NIO shareholders have not been having a great couple years because the stock is down over 90% from its all-time high set in February 2021. Analysts are saying the stock could go as high as $13, as low as $4.80, and their average estimate is around $7.32. Now, I'm going to use their sales, their shares outstanding, and their price-to-sales ratio to calculate some estimated stock prices based on a bunch of sales ratios, which I have here. So we have a share price of $5.80 right here, our shares outstanding, and we've used that and the revenue to get their current revenue per share of $4.47. Their estimated growth for next year is 19.6%, so I've put that here, which would make their forward one-year revenue $5.34. We've carried that over to here, and if we apply their projected 12-month revenue to their current price-to-sales ratio, we can expect to see a stock price of $6.94, which is a 20% increase from where it trades today. The auto manufacturing industry average price-to-sales ratio is 1.4, and so if NIO was to see a 19.6% revenue growth next year, and their price-to-sales ratio were to go up a little bit to compete with the industry average, their stock price would be $7.48, which is a 29% increase. For the competitor average, I have the competitors down here. We have RIVN, Tesla, and Lucid. RIVN and Tesla are similar at 6, and Lucid's pretty high at 18, but we've just averaged that out at 10.2. And that would give us a share price of $54.47, something NIO shareholders would love to see because that is an 839% increase over the stock price today. The S&P 500's average price-to-sales ratio is 2.8. That would give us a stock price of $14.69. And my best guess is that it's going to stay around the same of 1.3. And that means it's going to be the same as that 20% up there. Because if the revenue grows 19.6%, and it's valued at the same valuation multiple, that's going to give us the 19.6 growth. And this just rounds to 20% over here. And that is the Savvy Analyst's best guess.